Welcome to today's market report.
European stock markets traded broadly higher on Wednesday, helped by positive global sentiment, although Germany's Commerzbank disappointed with a second quarter loss. DAX in Germany traded 0.4% higher, CAC 40 rose 0.3%, FTSE 100 climbed 0.2%. European markets were helped by a positive handover, with Asian markets lifted by China's services sector recording faster growth in July, while on Wall Street the broad-based S&P 500 closed Tuesday at a fresh record high. The European second quarter earnings season, which has been generally positive so far, has continued Wednesday. Taylor Wimpey stock rose 4.2% after the UK home builder raised its full-year earnings outlook, benefiting from Britain's house boom, while Hugo Boss stock rose 1.2% after the German luxury fashion house said it expected business to continue to rebound in the second half of the year as sales recovered to pre-pandemic levels in Britain and China in the second quarter. Commerzbank stock fell 4.5% after the German lender recorded a second quarter loss as it continues with its major restructuring involving hundreds of branch closures and 10,000 job cuts. The bank also announced it would write off €200 million in the quarter, abandoning a project to outsource securities settlements to HSBC. The results were an outlier from most of the European banking sector, which has generally beaten expectations this quarter thanks to reserve releases and the economic reopening. Thales stock rose 1.9% after the French aerospace company announced Wednesday that it was in advanced talks to sell its railway signalling business to Japan's Hitachi for around $2 billion. RollsRoyce stock rose 1.8% after the British engine maker agreed to sell its Norwegian ship engine business Virgin to UK-based Lanley Holdings for around $130 million. In Switzerland, the mystery over the recent rally in pharma giant Roche Holding AG was cleared up as SoftBank revealed it had taken a $5 billion stake in the company. The Eurozone July services PMI data rose slightly from the previous month but came in just below expectations. Oil prices stabilized on Wednesday following constructive down days on concerns that mounting COVID cases in both US and China, the two biggest consumers of crude in the world, will hit fuel demand. The US crude futures traded 0.2% higher at $70.73 per barrel. Brent contract rose 0.5% to $72.75 per barrel. Gold futures rose 0.2% to $1,818.3 per ounce. On the FX front, GBPUSD is heading towards July highs at 139.85, extending its bounce from near the 138.75 region. The bulls remain in control above 139 amid a broadly softer US dollar, dividend between looming coronavirus worries, progress on US infrastructure bill and dovish Fed expectations. On the GBP side of the equation, falling COVID cases in the UK and its relative success in the vaccination campaigns underpin the pound. Meanwhile, the GBP bulls also share the Brexit optimism, especially after the EU has backed off the threat of imminent legal action against the UK over breaches of the Northern Ireland protocol of the Brexit agreement as the two sides try to work through their differences. The immediate focus is now on the US ADP and ISM services data, while the UK final services PMI could also offer some trading incentives to the pair. However, the main event risks for the cable are the Bank of England Super Thursday and Friday's non-farm payroll report. The UK central bank is likely to maintain its monetary policy settings, while the focus will be on the economic forecasts, with rising concerns on inflation, which may prompt the BOE to hint at tapering soon than expected. However, amidst ongoing certainty over the economic recovery in light of the Delta COVID variant flare-ups, the central bank could refrain from offering any hawkish signals, with the recent rally that followed a brief consolidative mode. GBPUSD price has taken the shape of a bull flag. The upcoming events are likely to determine whether the cable will yield the upside breakout from the bullish continuation formation or lead to a pattern failure. The Eurodollar was trading near the 118.70 region, falling back from yesterday's 119 mark. The dollar index was down 0.08% at 92.017.
This is today's market news. Thanks for listening. We'll see you next time.